Hello and welcome to Pitt Street Research. My name is Stuart Roberts and I'm one of the co-founders of our firm. And joining me on the morning of Friday, the 25th of October, 2024 from Pamplona in northern Spain is Mr. Ignacio Salazar, who's the CEO of Highfield Resources, ASX HFR. Ignacio, good morning.
Good morning. Nice to be here, Stuart.
It's Friday, late on Friday evening here in Sydney, so you're my last meeting of the day, understandably.
As usual, we're catching up Australia a bit in the afternoon, evening for you guys, but yeah, understood. Great.
Right. Not many companies based in Spain publicly traded on ASX. In fact, I think you're about it. But a particularly valuable asset, not far from Pamplona, where you are, is the Muga Potash Project. And Highfield's been working on this project for the best part of a decade. You joined the company in 2020. Just recently in 2024, you've achieved a major milestone. The Chinese coal miner Yankuang is coming in as a major partner, providing the remainder of the equity financing that will allow Muga to get up and running. So huge transaction for Highfield. In fact, company making for a number of reasons. Talk to us how long you were negotiating with Yankuang before this transaction took place.
For quite a bit of time. I mean, since the end of 23, in fact, and not only Yankuang, but obviously this has been a very thorough strategic process, to get to this point. So we've been already a bit longer in that strategic process. Just to cover the last 4 years that I've been with the company, the first two and a half were all about the permitting and secured all the permitting for Muga. And the 1.5, 2 years has been about the financing. First of all, the project finance, the debt. We secured that not relatively quickly. It took more than a year of due diligence, but I think a very solid and very good commercially deal for the 320 million euros. And this strategic process has taken a time. I mean, a company with 100 plus, at the end of the day, it's a company with 100 plus million market cap, and the project is more than 500. When you add debt plus equity, the capex plus the buffer in terms of contingencies and everything else, we are talking about 550 million euros that Muga requires to go for. So very much quite a thorough process, but with now we are very pleased with a very successful outcome, both in the permitting, we know at least for a while, and now with the financing and the full funding of Muga. Plus, extras, and extras that came as a result of this strategic deal.
Yeah, absolutely. And the extras are very interesting. But let's talk about Muga in the first instance. Potash is a resource that the world needs more and more of. Before you and I die, there's going to be about 10 billion people on planet Earth. And in order to feed those people, we're going to need more agricultural productivity. Potash is an ideal fertilizer molecule. But traditionally, Western Europe has not had much production capacity. A lot of it's come from Russia, Belarus. Even though Western Europe's an agricultural powerhouse, it doesn't produce much of the potash-based fertilizer that would power local industry. You're about to change that with Muga.
Yes, well, absolutely. I mean, very, very strong fundamentals. We like to say mining will always be cyclical, as many other businesses, but you can see that there's very strong and difficult to argue fundamentals with population growing, arable land decreasing. It's all about fertilizers, the NPK, nitrogen, phosphates, potash, that will make that formula work. From the supply side, as you say, very much Europe, especially we have mines. We have a list of the mines in Europe. They are 80, 90, 100 plus years old. So all of them pretty getting very much to the end in decline. So very mine supply that is only going in one way, especially in the next 10 years. We've seen already some closures and we will see a lot more. Right now, Europe is only able to supply half of its demand. The other half used to come mostly from Russia, Belarus. Right now, more from Canada, which is not the efficient way to do it. Obviously, it's a lot more efficient. Canada supplying Asia and Russia and Belarus supplying Europe. But very much there is a a gap that is only going to grow. The gap is, so the demand in Europe is around 7 million tons. And so 3.5, just for the sake of discussion, is what Europe is lacking. And that will only grow. We will be able to get 1 million in Muga in production at full production. And so we will cover a big part of that gap going forward, and we feel no doubt for Muga being in the middle of the European market, that is the strongest competitive advantage of this project in the potash industry.
Right. I've looked at the bankable feasibility study for Muga, which was done a number of years ago and has been updated several times. The economics are compelling. On the most recent one, now we live in inflationary times right around the world, unfortunately. So you've had to revise your bankable feasibility to adjust for rising capital and operating costs. And on the latest one, after everything has been going up markedly in price, you can still produce at only 108 euros a ton. That's well below the currently traded price for the commodity. So this is a highly economic project.
Yeah, highly economic project. We are talking about 1.8, 1.9 billion of MPV. And basically, there are maybe the key reason, well, again, is this to be in the middle of the market. This is a high volume. Every ton of potash is 300, 400 euros. No? So you need to move a lot of tons to generate the revenue that we generate. And transportation costs, logistics are absolutely critical. So not only we will have access to the market, so we will have guaranteed almost captive markets for us, all the farmers around the mine, but also we will be able to do it at a lot better competitive transportation cost, no, compared to somebody taking that from the middle of Canada to Vancouver to take it to Europe, Bilbao, and getting into Spain or France, no, which is around the area of the mine, 500 kilometers from the mine. Tracking distance, we will have half of the production or more. No? So our main market will be Europe. We will be supplying to the southern hemisphere as well for seasonality reasons, but that is a very strong driver in economics for the project, the low transportation cost. The other, by the way, Europe has been trading for many years at a premium compared to the global potash markets because the supply-demand tensions. Right. And also, I must say, our mine in Muga will be more effective or cheaper, if you wish, will be a lot less cost to build than other mines. The mineralization is a lot closer to surface compared to other projects that typically are 1,000 meters deep or more. We will be 300, and that allows us to go through with 2 ramps into the mineralization rather than building these expensive shafts that some other companies are building to create their projects. And also, by the way, we are in a very developed area. All the infrastructure around the mine is already there. Motorways, rail tracks, electricity, gas. So it's not the port of Bilbao, 200 kilometers from the mine. So we don't need to invest on all those infrastructures that tend to be a big part of the CapEx bill at the end of the day, and that makes low capex, high margin project, and that is what I mean. And again, difficult to argue, very strong economics for this project.
Absolutely, and that's attracted your new soon to be majority owner. Now, a lot of Aussies will know Yankuang, the major Chinese coal miner, because of Yancoal Australia. A lot of coal mines in the Hunter Valley where I hail from. So they've proved to be a good corporate citizen in Australia. What's attracting Yankuang to get, well, not so much out of coal, but diversify away from coal and invest in a potash project?
Yeah, well, no, that's very important. I mean, as I said, we've put a lot of effort through this strategic process, and the outcome of that, it cannot be any more strategic. It's a really strategic outcome where I like to say, because I really believe so, it's a win-win. We will unlock a lot of value this will be real synergy. This will be one of these cases, 1 + 1 will be 3, no? In the sense that they obviously have their own asset in Canada that they had started to develop, but that is behind. We made a lot of progress in the last 4 years with Muga that they have been, not at the same pace and maybe that is one of the things, obviously, is the team and the ability that we demonstrated and the track record to go through the permitting and the financing. So they know they rely on a team that has been proved able to do that. And on top of that, the idea, the understanding, the plan is to build Muga is ready to go first and get the team stronger through the building, the construction of Muga. And with that team, just to be able to develop and to get Saudi into construction and build Saudi straight after. No, so I think they saw the opportunity from the point of view of team and the possibility to get that will create a company, and that is what we see as well, with a capacity to be competitive at a global level in potash, with assets in top jurisdictions, ESG as well, coming back to your point about diversifying from coal and moving into potash, and in Europe and in North America, and with a very, in the case of Saudi, of course, very important, the key point about Saudi, amazing geology, amazing reserves and resources, relatively inexpensive, effective mining method and cost. But the key in those projects is have access to capital, because are more intensive in capital, and markets in Asia. As I say, Canada should be supply. And that is what we will have, by the way, by design, with the new set, not only Yankuang, but we have Beijing Energy, Tanshan, other Asian investors. So very strong support in Asia and the ability to access the Asian markets with that access, in addition to access to capital. No? So capital and markets are given. Yeah,
so,
absolutely.
So not only Yankuang, but affiliated companies with Yankuang, and potentially a listing in Hong Kong once this transaction goes through.
Yes, well, not necessarily affiliate. They are all independent players in their industry.
Yeah,
Beijing Energy is very much renewable. All their investments in renewables, and they see the opportunity working with us and Canada also to other synergies into the electricity and renewable business, and also to cooperate. Again, very much a win-win. Taishan is, by the way, is a Singapore-based private enterprise, and just doing commodity trading, bulk commodity trading. Right. Again, potential for other type of synergies. Everybody that has been involved, and hopefully we will get some other investors, where we found and they found there was synergies and ways to unlock and create, making the pie bigger, rather than squeezing to get a bit of an extra piece of it. So we really believe that has been achieved, and we are in that track. And along those lines, and the lessons learned from Yankuang Australia as well, this obviously in this new setup, the Hong Kong listing potential, is not still, we don't have the new board and the new Highfield setup, but it looks like a very reasonable an obvious step forward, create more liquidity, support share price, and maybe follow, or maybe better, track record of success as the one Yankuang Australia got in terms of economic performance and revaluation of the company and share value going forward. Yeah, absolutely.
Let's talk briefly about Canada. We've mentioned Southie a number of times. So basically the entire economy of southern Saskatchewan basically is built on potash. You had Nutrien obviously is a major player with a number of mines. BHP now investing heavily with Jansen, and now you have Southie, which is not far away from Jansen. So suddenly you're a real player in that magnificent potash province of southern Saskatchewan.
Yes.
You've had enough time now to get to know that project. What are the advantages of owning Southie as your next project after Muga?
Well, I think a lot, very complementary to Muga, complementary, different strengths and weaknesses, but very complementary. The fact, I explained that before, we do Muga, to me, and I'm glad that our partners, Yankuang, Beijing, feel the same way, very smart strategy to do that approach rather than anything else. But Saudi itself, obviously, you said that top jurisdiction from a geological point of view, top quality potash assets. Well, you only need to look around to see what else is there. Probably the more relevant to us is the Bethune project in terms of similarities, the Bethune project from K+S in terms of the mining methodology and well, to some extent K+S as well, with some mines in Europe plus this asset in North America. So also the scheme. But what we see is that no doubt in our mind, the quality is there, the long mine life, the low mining cost, the potential to significant production, just to put the company, as we also have made some, once we are in full production in both at the levels that today are well close to ICL or K+L, so a significant transformation of the company. Right. And very much, as I said at the beginning, you are competing, you can argue, with very good, tough competitors, but if you have the access to the markets and the capital, you are in a very strong position going forward. Obviously, you have the technical capability and the track record, which we have been proving and will prove with the building of Muga to get there. No? So we have, not only we are in an extremely top, I would say, number one in the world from the quality of the asset, but also we will have the additional ingredients to make it work, which is the capital, the access to the markets, and the team to do it. No? So the asset speaks by itself, and then our capacity to compete will be there, in my mind, no doubt, once we are into Southie.
Right. So all that's left now, obviously, there's a lot of paperwork that needs to take place between now and when this transaction closes next year. The key one is regulatory approval. Obviously, yes. Beijing needs to approve this because of the companies involved. You need regulatory approval in Spain because it's an investment by a Chinese company into Spain, and also Canada because of the transfer of the assets. So a number of governments and government agencies are going to have to get involved in approving this transaction. What other risks are there involved in completing the transaction that you've announced?
We think everything that we are doing in this deal works in the right direction from the point of view of the sort of the drivers of all these regulatory approvals. In the sense, Australia, we don't have an asset in Australia. I mean, Yankuang, Australia has gone through their own fair process, very similar. Yes. So it's only reasonable to believe that obviously we have to go through the process. There is a process as well in China, but both Yankuang, Beijing Energy has gone through a lot of internal regulatory approvals to get to the signing of the deal. So we think that is also done. Again, then it's about Spain, Canada. Spain extremely, I mean, the president of Spain was recently in China, very much obviously supportive of foreign investment in Spain and very keen to see things moving. That is what you will see, obviously, is a change of control at the parent level in Australia. But as I said, politically extremely supportive. Canada, we know that obviously that is where politically is more of an issue. The control doesn't change at the end of the day. I mean, and if anything, you move from an asset 100% owned by Chinese interest privately into an asset that will be owned through an ASX listed company with all the extra reporting and governance and the dilution of Chinese interest. So again, going in the right direction. So I think all of that means pretty solid case in the 4 jurisdictions, but obviously pushing hard to get the paperwork properly done.
Yes. Now, many investors here in Australia don't know you, Ignacio. So your background, you trained in economics and in law at the University of Deusto in Bilbao. You've spent most of your career in the mining industry, most recently at a company called Orosur that had some mining interest in Latin America. Tell us a bit more about yourself.
Well, you said quite a bit already. Very much did like 2 degrees. Well, and in Spain in the old days, Spain very isolated, so not many people going out. So I was probably at the time one of the few. Lucky to have a long, I think 20 years almost career with Shell, with the oil and gas company. Started in Madrid, but pretty soon sent us an international staff into Aberdeen, in London, several countries in Europe, Germany, I've been in Germany, Denmark, and then South America as well, in Argentina, oil and gas, exploration and production, new business development or finance. And then, as you say, I worked with Orosur for 12 years, Toronto and London listed, with mine in operations in Uruguay, and then some other projects in Colombia, Chile. So extremely interesting as CEO for the last, I was there 12 years, for the last 8 years as CEO, and then these 4 years now in Pamplona, which is, by the way, after almost 30 years going around in Europe and in South America,
back home, finally.
I am almost practically. I come from Bilbao, so it's from where the port is 200 kilometers, but it's part of a very close, as close as you can make it. After so many years going around living really in other countries.
Right. Well, Ignacio, well done to you and the team. It's been a great achievement. We've been several years of negotiating. Well, first of all, get the bankable feasibility study, then the debt negotiations, which you and your team were able to handle, and finally now this major transaction with Yankuang. Well done. It's been a great progress, and we're telling people down here, pay attention to this stock. It's trading way below the value of the DFS for the project, with some pretty reliable funding coming in from your new partners.
Well, it's trading well below the 50 cents that the new investors are paying for just to get in, and that will be consolidated hopefully in the early part of 2025, and then well below the potential of Muga, and well below the potential of Saudi, and well below the potential of this new company, which will be. I mean, we were recently in Australia. And we want to make sure people understand we are in a completely different business proposition to the one we want before. So it may take a bit of time for people who have been looking at Highfield for 10 more years. They had a concept in mind. This is a new one, for good and bad. I think for very good. But people have to look at the company in a completely different set of glasses now.
Yes. Well, it's Friday evening here, so I can do this. So here's to you and your team. Well done. And I've got my Spanish flag here.
Great!
Right on the Spanish flag, it says Plus Ultra, means Latin, go further. And clearly, Highfield is going to be going further in 2025.
Absolutely. Right. Thank you very much, Stuart.
Thank you for doing
thanks a lot. Research.